Hello, FinTech leaders and builders. I'm Vasil Solashuk from Insart FinTech Business Accelerator. And this is our next episode of the Guts, Grit, and the FinTech podcast. And this is the show for FinTech entrepreneurs and investors who are not afraid to take the risk, to reap rewards, and build the brighter financial future. And we continue our mini-series with investors who reshape how startups secure the resources they need. And today we will unpack why open access to high-quality data is a game changer, how collaboration beats competition in B2B fintech, and also we will touch how AI is rewriting the rules for data availability. And our today's guest is Sarah Biller. She's a co-founder of FinTech Sandbox. And Sarah, it's great to have you with us today.
Vasil, thank you for this opportunity to talk to you. We long admired your work, and so I'm pleased to be here.
Absolutely, thank you. And Sarah is a fintech entrepreneur, investor, educator. As I know, you're also the global women leader in fintech named by Innovate Finance Top 150. Is it correct?
That is correct. I was very fortunate to be chosen. Yes.
All right, absolutely. So let's actually dive into the topics today. So let's start from the FinTech Sandbox. So for listeners new to it, what is actually FinTech Sandbox and how did you come to co-found a non-profit that gives the early stage fintechs free access to the premium data sets, which is in many cases an obstacle for the early stage fintechs to move forward? Like, what problem were you solving back 2014 when you co-founded it, and what does the program looks like today after supporting more than 300 fintech startups?
Yeah, Vasil, thank you for that. It's truly an honor to think about where we came from FinTech Sandbox to today, but to kind of go through our own time machine and think about what was happening in 2014. We were very much in the wake of the credit crisis. There was clarity of purpose among fintech entrepreneurs, including myself, that there was a better way to intersect technology with financial services, whether it was to head off risk, to improve payments, or the way that money moved, which is our 3,000-year-old reason why we have financial services. There were many opportunities that came out of that crisis. I then was an entrepreneur in the capital markets space. I had built a predictive analytics platform for institutional debt investors. But one of the obstacles that stood in my way is I sought to actually myself build an early warning system for the rise of non-financial factors that were widening credit risk. The basis of our credit crisis, I felt like we had a new way to solve. I was unable to access the fullest set of data I needed to prove that thesis. I had raised a round of venture capital. I had a tremendous technology team. I had been in the industry, but data eluded me. And so in partnership with my co-founder, David Jagan, an investor at F Prime Capital, and other entrepreneurs, we came together and said, what if we could find a way to put high quality data in the hands of entrepreneurs who were trying to drive at this innovation? We knew one of the obstacles was simply the procurement process. It was lengthy. It was hard to get the attention of the data providers, but it was also the cost. There's a reason why this is costly. It's our new oil, as people have said before. Data is important. It was important then, and it was important now. And so our origin story really is like all good entrepreneurial stories. It started with a personal problem that was confronted by the broad entrepreneurial ecosystem. And so we put in place this organization, and we did it as a not-for-profit because we wanted to be arm's length to the commerce side of the house. We just wanted to be an enabling organization for all of us that were, as you rightly said, we share your vision. We together with the right tools can build a better, more resilient, more inclusive financial services sector. And we chose to focus on data 10 years ago.
So why specifically nonprofit? I'm myself a co-founder of several nonprofits in the tech industry. Back in Ukraine, I'm a co-founder of Kharkiv IT cluster with the Ukrainian and now even pan-European nonprofit organization that helps technology companies with R&D centers in Ukraine to develop their businesses. But why specifically you decided to go the nonprofit way rather than for-profit way to solve the problem that you described?
Yeah. And you should tell your story too. At some point, we're going to have to interview you. Because I do think it is a conscientious but odd choice in financial services to take the not-for-profit path. It's very confusing, by the way, when you tell someone in the industry, I have a not-for-profit, because we are about making money. But the reality is that we could not do the work that we're doing at FinTech Sandbox alone. We needed then, as we do now, the partnership of what is a global multi-billion-dollar data market data industry itself. We wanted them to see, not only as we did as entrepreneurs, that we could build solutions that were of pressing problems to the industry if we could access data, but conversely, those data partners who held that data in their hands could put it in place with emerging innovators, with entrepreneurs who were using that data in new and differentiated ways. The data partners had to see that there was possibility and the promise that their data would be would deliver new outcomes, if you will, new tools, new services, new distribution channels that incorporated that data. But like all businesses, and we respect this, if we were enabling our entrepreneurs to succeed with their data, eventually there would be a commercial partnership. There would be something that worthwhile that came out of it for these data providers. We hold true to that promise today, and that is why we don't really even get in the middle of the data partner and the entrepreneur as they're using the data. Our program also is time boxed. You, as an entrepreneur coming into FinTech Sandbox, you do get free access to these incredible data sets. Today, we work with over 40 large data providers, and they enable you to have unlimited access for 6 months to their data to build your products. And it's a trust compact that was only created when we said that we were not about the commercial outcome ourselves, but we were after the enablement of it. And it's paid off. So it's paid off in so many different ways. Companies have been acquired. They've raised big rounds. They've built groundbreaking products that introduce, new financial services to people who otherwise were underserved. And we're global today. So I'm happy to tell you, since we set this call up, we've actually crossed working with 400 startups.
All right. Okay.
Yes.
Congratulations.
Thank you.
Well done. So we should be talking about 400 startups now then.
That's right. They're on 5 continents across 19 countries.
And look, so my perspective on nonprofits serving the for-profit organizations, like in the B2B style of business, is about building the ecosystem. And absolutely, some ecosystems, they are missing an opportunity to collaborate because they don't have such nonprofits in place. Okay, so this is my experience again with the nonprofit serving the tech companies. So you have orchestrated this ecosystem, so where data providers, incumbents, and early stage younger companies cooperate. And my question is, so what tactics specifically convince the large vendors and larger banks to open doors to seed stage startups? Like, what is your framework to build the ecosystem?
Yeah, I do believe it starts with exactly what you just said. It begins with a belief that rising tides can lift all ships. And so we do begin with a structured approach to ensure that the entrepreneurs that we work with through the data access residency program themselves are ready to ingest the data and use it in a way that's productive, and they can demonstrate it to the data provider who is offering their product. So the first thing is that there is a very structured approach to ensure efficiency of everyone's time and readiness to execute. Our third stakeholder in this exercise, of course, is the industry. And so we have also brought to the table large industry partners who seek themselves to understand the innovations, the innovators. Remember, everyone's looking for the next great idea in financial services with the use of emerging technologies and data, but also the talent. What is the thinking? Where is the puck going? Where are things being built? And so we have, as part of the ecosystem, also included the industry partnership. And so once we work with an entrepreneur and they have access to the data, we will hold global demo days. We just did our 11th one in London about 3 weeks ago. We brought our show on the road. We host a large week in Boston called Boston FinTech Week. It brings together about 4,000 participants, again, from all of the, North American financial services centers of excellence or centers, but also globally. So we really do try to begin to broaden also the story, the awareness of what is being built in financial services around the world with this data. So it starts very curated, and then we amplify what's being built. So that's been our approach. And again, we do it with the sense that we are, again, trying to lift up the entire industry and all participants in it.
So speaking about the demo day, what was the purpose? Was it to pitch the investors or pitch the banks, or what exactly?
Our demo, all of the above, actually. So our demo day really wanted to allow for, in this case, where we had 5 startups presenting, 2 from the United States, 2 from the United Kingdom, and 1 from Scandinavia. That shouldn't exclude all of Europe, but we wanted to represent. And each of them thematically were trying to remove a friction point in their categories. So they were pitching banking, investing, new forms of lending. And so you had the entire kind of, if you will, the broadest definition of fintech represented across each of the categories, and also having a perspective that we are, again, a globally integrated system. That enabled lots of participants from the investor, the entrepreneurial, but believe it or not, the academic sector. Regulators learn from our startups when we have demo days. So it has a generalized education purposes, but we do with a lot of conscientious effort do connect our entrepreneurs with investors. It's one of the things we take great pleasure in doing.
So Sarah, look, still democratizing data sounds like a really noble quest, and still data remains a huge competitive advantage for banks and credit unions. We can say it's like a pricey mode for incumbents. And critics say like giving the data away can undermine revenue or even trigger some regulatory headaches. So why do you think still is the broad access to data is non-negotiable for the future of the industry? Like, what proof shows startups use this access to actually create value rather than, like undercut the existing players on the market?
Yeah. I think there's a couple ways to answer that. One is the criticality of data as important today as it was 10 years ago when we started FinTech Sandbox and we had these obstacles to access? I think we as a FinTech Sandbox team took a step back coming into this year and said, are we still relevant to the question of advancing the industry? And along those same timeframes came the launch of ChatGPT, of generative AI, of these billion data point plus systems that were using data to infer new activities. So we went from a period where data access looked a little bit like neatly structured data in rows and columns at its messiness, right? It was in text format, what the industry needed. So you had to apply some, semantic learning tools like NLP. That's been our challenge as long as access has been to capturing new and differentiated insights and pieces of data and turning them into insights. Then you hit an inflection point where the launch of these new, very powerful AI tools really dwarfed what data sets today really can do. And so I think we would tell you that we are on the cusp of another incredible market transition in financial services about the capabilities, but the data sets themselves are so much larger and so much intertwined that there's a new question about data and data availability that must be answered. So I think that's one answer. And then the second answer is of course the fluidity of which we operate as individuals and interact in the actual global financial services system. There is dynamism in the way that money has moved. In the United States this year, we'll likely see groundbreaking policy changes around the way that a stable coin gets deployed or other digital stores of value. And so there's no shortage of need for innovation that's happening in the core central financial services system. But I think what we see too is that the data sets need to expand to meet the opportunity where entrepreneurs are embedding fintech capabilities in non-traditional industries, in new industries. So I often think about financial services when I started was an industry vertical. Today, because of fintech, it's horizontal. It shows up in every industry category. And we must continue to provide data to enable those entrepreneurs who are intersecting fintech with health, fintech with new sustainable energy, fintech with transportation. There's no limit to where we'll see these entrepreneurs going. And consequently, we need to ourselves be broadening our thinking on the types of data they need to advance their innovation.
You mentioned ChatGPT, like now everybody need to discuss this topic.
Yes.
But let's be very specific here. So basically, we do have the generative AI evolving. We have agentic AI now. We have synthetic data to lower the cost of extracting the insights from the data and make them actionable insights. And still there are so many new use cases are being tested, how we can actually apply the generative AI going forward. Some say that, and some think that AI will skyrocket the demand for cleaner data feeds, or we can say for cleaner ground truth data feeds. So my question is where do you land here? And how is the FinTech Sandbox adapting to AI that reshapes the data landscape?
Yeah. So thank you for that question. It's not without complication about how the data landscape is being reshaped under AI. I think on one hand, there is going to be an insatiable demand for data that itself is first off, it is true. And I'll juxtapose that between the inclination in a lot of corners of the industry to begin to create synthetic data sets, right? So the actual data set that's whether it's coming off of a smart device, an IoT, something with IoT, in contrast to a data set where you have a creation of that data set that is statistically sound, but 1 degree or 2 degrees of freedom away from the original data set. There is a lot of tension that's happening in the industry and in the data world that has yet to be resolved about which is the better use of or better application of data in these models. The third conflict that we're facing that I'm not sure I can give you a good answer of where I fall out, but of course is the need to guardrail data that relates to privacy. The LLMs themselves are pushing the limits. They're pushing out what is actually been historically accepted for us in the industry as it relates to a privacy first principled approach to building risk analytics, building anything that has to do with personal choice. And so we're going to confront those three challenges very quickly in this race for every company must be using AI to maintain the productivity of its employees and the gleaning of information amongst what is now not just terabytes of data, but analyzing petabytes of data. And so I don't have a good answer of where I fall out, but I have a good answer on the notion that today we must as an industry come together and develop the right questions. Just like you do the LLM, we ourselves must be really good prompt engineers to understand the implications of data use and data creation in a world that we've never seen before in the industry.
Yes, absolutely. Absolutely. So the prompt engineering, I think it's a must-have skill for probably everybody now in the industry overall. To wrap up our conversation, so you're building the ecosystem and you're guiding a lot of founders, through their journey with this ecosystem. So if you would pick one KPI that tells you that your ecosystem actually works, so maybe you're already doing this, but if you would pick one KPI like jobs created, follow-up capital, customer pilots signed, like which metric would you put on the front page of your annual report?
Oh, do more good is definitely not a KPI, right?
Yeah, it's let's talk about like specific KPI.
That's fair.
If you have
That's
the
fair.
one.
Yeah, I think one of the best KPIs that we actually track today is that when we enable a founder to build a company, and that through the data, originating the data, and that company grows to such a size, whether it's because we've helped them identify customers or new investors, that company grows to such a size, it realizes that it is producing data sets that if they put their own data sets in the hands of the next generation of entrepreneurs, those entrepreneurs would even magnify the impact of their own doing. We've seen that a couple times at FinTech Sandbox. One of our earliest founders, Seven Cord, by the way, she happens to be a Ukrainian, has built an astounding platform for fixed income investors to price their debt. That data that they now throw off comes into our platform, and we're able to help other entrepreneurs use their pricing data. She's a brilliant entrepreneur. We saw that with Petal when their valuation went over $1 billion. They realized in their own work, the exhaust data they were providing would help other entrepreneurs identify ways to better meet the needs of underserved individuals in the banking system. So they started Prism Data, and they allowed us to also be a distributor of their data. So if I had to say one KPI that's a little bit unconventional but important, it's that we're enabling entrepreneurs to grow their companies to the point where they see that the data they're producing out of their own application can be used in new and expanded ways by the next generation of entrepreneurs. And that's what we'll continue to look for in our growth.
So it looks like this KPI will reinforce the building the whole ecosystem going forward. And I absolutely love this KPI, by the way. And yeah, so Sarah, thank you very much for sharing all the insights and how the FinTech Sandbox ecosystem operates today. I think that this is a really great value proposition for the whole industry, that early stage startups can have the early access to the data, because we have found that in many cases early stage startups in fintech fail because they are not able to negotiate having this data in the early days of them, because they don't have like reputation, they don't have specific product in place, and the incumbents are hesitant. So why should I share this data specifically with them? So this is absolutely great mission that you're fulfilling for the industry. And thank you for doing this.
Thank you. It has made my heart sing amongst all of us. So thank you for letting us share a little bit about our work.
Yeah, and of course, as a fintech business accelerator, we'll be sending the startups your way, and definitely there are a lot of work to do here. So, and Sarah, thank you, and again, thank you for everybody who are watching us today. And next up, we will host founders who scale their data-driven fintechs all the way to acquisitions. So don't forget to subscribe, to like this video, and to ring the bell, not to miss our next episodes. And that's all for today. It was me, Vasil Solashuk from Insart, and Sarah Biller from FinTech Sandbox. And let's keep building the fintech together and brighter financial future together. Thank you, and bye-bye.